At what point will a business investment become significantly profitable? In simple terms, return on investment, or ROI, answers the question, is it worth it? More technically speaking though, ROI is a mathematical formula used to evaluate investments, or judge how an investment compares to others. An ROI calculation can be used, often with other approaches, to develop a case for business proposals. Demonstrating a compelling ROI is vital to securing support and funding for certain projects. Read more about the process and the importance of securing ROI in the link above or in the description below. There are multiple methods for calculating ROI, but the most common is net income divided by the total cost of the investment times 100. For example, if an investor put $10,000 into a venture and the company's net profits were $15,000, the investor made $5,000, and the ROI would be 150%. It sounds simple, but calculating the investment figures for each piece of the ROI equation can get complicated for businesses. For instance, if a company wants to invest in deploying new computers, it must consider a variety of associated costs, including the actual price of the computers, tax and shipping costs, consulting fees, and setup and maintenance costs. Then, the business would need to calculate net profit after a period of time, which could include hard dollar amounts from increased productivity as well as reduction in maintenance costs compared to the previous computers. ROI is one of the most common investment and profitability ratios used today. Benefits of using ROI ratios include generally easy calculations, using few, easy-to-find figures. Comparative analysis capability, with widespread use among organizations. And measurement of profitability, relating to net income for investments in specific business units. But it does have some limitations, like inability to consider time, different ROI calculations used across businesses, managers only selecting investments with large ROIs, and having no way to account for non-financial benefits of an investment. What are some alternatives to ROI for measuring business investments? What's worked best for you in your business? Share your thoughts below and be sure to hit that like button and subscribe.